Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm betting a penny. I will buy the stock for a penny.
With everything that you need to start your trading day. Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep. Spencer Israel, as always, joined by Joel Elconin and Dennis Dick. On today's show, I think we are in full-on bear mode, but we're going to talk through this market and figure out anything we could buy or maybe just keep selling. I don't know. We got some news, though. We got a couple of earnings. We have TLRY making a move in alliance with ABEV. We're going to talk about oil. We're going to talk about gold. We're going to talk about some bad drug news we had this morning, and follow through on the Fed. I hate when people say the Fed moved the market down because, in my view, the market moved the market down. The Fed just did what the Fed was going to do. But we'll talk about that as well. And Dennis is feeling a little bit bearish today. And the last time he felt this bearish, we had Anne-Marie Baiynd on the show. She was able to talk him off the ledge, and she's going to be on our show again today. She'll join us at 8:15. She is the author of thetradingbook.com, and she will hopefully talk Dennis off the ledge here. But before we get to him, let's go to Joel, and let's have him tell us about what's happening in the overnight session.
Joel, we can't hear you. I don't know if you're muted or I hear you, but they can't hear you. Can you guys hear me?
Joel,
chat if they can hear. I know we can hear Spencer. Oh, we do hear me. We do hear me. We don't hear Joel for some reason. Can you guys hear me? Joel, chat if they can hear.
Joel.
I know we can hear Spencer.
Okay.
Yeah, for some reason Joel is not coming through. Let's
take a quick break then.
Take a quick break. We're gonna just switch this up. Sorry guys, technical difficulties.
No, Joel, check your
technical difficulties again.
Check your headset microphone. Your headset mic. Are you
muted? Yeah, but I hear him. We hear him on Skype, so his mic is working.
Very strange. All right, we'll be right back.
But his voice isn't coming through on the show. Spencer, can you run it? Spencer, can you run this from your end? Maybe is that gonna fix it?
I don't know why.
Will that fix it?
Me on mute. Hold on. Stop.
Maybe is that gonna fix it?
Don't mute us. I don't know.
You're a hot mic, Joel, so it's not muted. I can hear it coming. Maybe
don't mute us. All right, we are back now, folks. Sorry about the hiccup there, but Dennis and Joel was just explaining to us what's happening in the overnight session. So, Joel, why don't you get back to your little thoughts here on where the S&Ps are at?
We're up four handles at 0850, pre-market low 2476 and a quarter. That matches the low that you had on September 8th, 2017. Pre-market high 25.18, not much up there. We had the old double bottom at the 25.30 area. That could be a target on the upside. Crude in the red by $1.62 at 46.55. Gold, which we'll talk about some more, is up $1.30 at 12.57.70. Silver in the red by a few pennies at 14.79. Good morning to you, Dennis. I know you're having some technical problems.
Yeah, it's one of those mornings. We're not only having technical problems on the show, we're also having technical problems with one of my platforms here, and I'm missing some positions from last night, but that's, for me to worry about, not for you guys to worry about. So thoughts here. Let's just go talk this overall market because, wow, what a sell-off yesterday. And I've been nervous, and I'm still going to remain nervous here. We had the little rally there yesterday morning, and I was like, you know what? I'm 40% cash. I'm going to more cash. I sold 4 more positions out of my invest portfolio in that rally around 9:45 yesterday morning. Sold half my Abbott Labs, which I've had for 8 years in my portfolio. Sold half my ABEV, which I've had since birth. I think it came out like 2011. I got a spinoff from Abbott on that, or I don't know when it was, 2012. So I've sold half of that. I sold part of my Virtue Financial because I'm worried about the whole financial, if the market keeps going ugly, they'll start to talk more HFT regulation, and that'll put pressure on Virtue Financial. And I also sold out the majority of my Crystal biotech position because I feel like this market is not the market to be speculating on small biotech plays in. So you can see how nervous I am when I'm actually liquidating stocks out of my invest portfolio. I'm saying 40% cash, looking to raise more cash. It looked like those sales were not going to be that great. About 10, 20 minutes later, we had even rallied further because we were up about 100 on the Dow when I was taking those sales. Went up to 300 on the Dow, and I was like, man, I guess I didn't time that very well. Well, the Fed comes out 2 o'clock, and kaplooey, the market goes, and all those sales look like very good moves here again. One thing in my invest portfolio is every single time I've been selling stocks, it's been the right move here. That's because we've been straight down for a month and a half. I don't know. I'm still nervous. Hopefully Anne-Marie can talk me off the ledge here, but I'm nervous as hell about this market. I would not be in 40% cash if I wasn't. Everybody else, Joel, we just lost. Joel just hung up.
Well,
He's
Joel,
not nervous. He
Joel,
must not like my bear friend.
I think Joel just may have had his internet go out for a second. But Dennis, the last time you were this scared, we had Anne-Marie on, so I hope she can maybe talk some sense into you here.
Yeah, I mean, you got to think, okay, if you're in it for the next 20 years, I'm not going to full on like cash, all cash, but I mean, it's hard to watch your invest portfolio. And in the last quarter, we're down 13%, but what are we down here in December? It's like straight down in December. And I mean, if you've got some of these other stocks, like, I don't have any financials, but if you did, I mean, Bank America started the month at $29. It's 24 here now. Citigroup has been down for 11 straight days, which somebody in my Twitter account actually fed me that, and I don't have his name in front of me. But Citigroup down for 11 straight days. That's incredible. No updates.
And you weren't in like the most high beta names.
No, I'm in conservative stuff. I feel like it's conservative stuff. I mean, I've been in. You know why I'm selling like Abbott and ABEV? Because I see what's happening in biotech. I see what's happening, in other stocks. I'm like, these have held up well. I mean, they're gonna start hitting this stuff too. They hit Johnson & Johnson obviously on its bad news, but it's not catching a bit. Procter & Gamble is looking like it's ready to fall off a cliff. Coca-Cola is going to the red here too. They're hitting the defensive stuff now too. It's just indiscriminate selling right now across the board. But whether that continues or not, who knows? We're due for a bounce. We're going to get a bounce here. You got to think we're going to get a bounce eventually. I mean, it's been an awful month. But I'll tell you, there's going to be a lot of people selling that rally, and I will be one of them too. I'm not looking as much to buy dips anymore. I'm looking just to sell rips. So maybe this is the bottom when I get this nervous about the market. But I said that yesterday, and we're down another 600 Dow points from where we were talking like this yesterday. So, I mean, it's ugly, this investment. The trading environment is awesome. I mean, from a day trading perspective, you're getting huge swings. I know Jeremy Newsom kicking some butt over at Real Life Trading. Congratulations, Jeremy. I'm kicking some butt at my trading too. The day trading is excellent. It's this investing that has really got me in the dumps. And I'm, nervous. I'm nervous that, there's more here than meets the eye. I still say Europe has major problems over there that are going to come to roost here. When the banks are this weak, they're all trading below book value. They were all trading below book value 3 months ago, though. Now they're even further below book value. JP Morgan's went from 112 to 97 bucks here. It's one of the best to breed. Wells Fargo 54 to 45 here in a month and a half. These are either going to be the best opportunities to buy or there's something more happening. And I'm worried that there might be something more happening. I went through the financial crisis and, you know, we've been talking about it a little bit on the show here. It's not out of the realm that we could have another financial crisis. That's what I'm preparing myself for, because I do not want to see my invest portfolio cut in half like it was during the financial crisis. It came back, but it took a long time to come back.
But we don't know if there's an underlying fundamental cause of what's happening right now.
Fear.
That's not a thing.
Fear.
That's not.
All right, can you guys hear me?
Yes,
I'm back here.
Yeah, we got you,
Joel.
I
was. Give us your thoughts here. You're an investor too, Joel. You're an investor. You've obviously had a little more cash too, probably the same reason I did, because we went through the financial crisis and when we got dinged, and we said never again am I going to get dinged. So I've always had more cash than normal. So when I say I have 40% cash, you know, I've probably always 20% cash because I always wanted that cushion. I've raised that cushion because I'm very nervous about this market. I don't want to give all my profits back. I've given, you know, a lot of my profits back on some of my investments. I don't want to give them all back, and that's why I'm starting to book some of them.
Well, first of all, I was going to give a raving review to Comcast. They were out here for 2 hours and is a great technician. And I really thought he fixed my internet. But so far, I may be switching that to a sell recommendation because I just went down. I just completely lost you. Number one, from a cash perspective, I think I've reiterated this several times. I've always been underinvested in the market, even before the financial crisis, just because of just being very conservative. So the stocks that I have are not high flyers. Yeah, they're underwater, but a lot of them are, you know, dividend paying stocks I've been holding for a long time, have a high cash component, you know, and had, you know, even though I'm not that old, I still have some fixed income and stuff. So, you know, I can't really raise any more cash. It's just, for me, it's just a question of not putting new money to work. And there's certainly no reason, you know, to put new money to work here at these levels.
Well, maybe there is. Maybe there is reason. Well, I mean, there's an argument on the other side. And part of me thinks maybe this is when, you know, some of my best long-term buys have been when there's blood in the water. And there's a lot of blood in the water right now. I want to hear the arguments. I want to hear the arguments for, like, why I should be just, you know, nibbling here into stocks, because every time I've nibbled into stocks here in the last 3 months, I've been killed. You know, I nibbled into Facebook, I nibbled into Alibaba, I nibbled into Activision Blizzard, you know, for the sports, and I waited a long time. I mean, Activision Blizzard was $80. I started nibbling at 50. And it was looking pretty good. It went up to 52, 53. I was like, oh, nice little cup and handle here. Maybe we're going to go, and boom, you know, now the bears take over. And it looks like it's ready to fall off a cliff again. So why should I change, and why should I, you know, continue to nibble when I keep getting hurt?
Well,
portfolio. That's the question. Not talking trading, investments.
You got to wait for the volatility to come down. And once the
volatility
market
is lagging indicators, the volatility will come down when the markets rally. The VIX goes down as the market starts to rally. So you're already going to be late to the game. You wait till the VIX comes down, we're already going to be back up, in my opinion. I don't think volatility is going to just all of a sudden go down and then we're going to start rallying. I think you're going to see this rip your face off.
It's going to be a while.
Well, how about?
Well, maybe not though. You know, maybe there is an opportunity. You look at even look at ATVI in October. This was $85. It's 46. It's been cut in half in 2 months. And thank goodness I didn't buy it up at the highs. You know, I've been wanting this in my investment portfolio for a long time. I talked about it. I want some exposure to esports because I believe in esports, and the multiple got reasonable at $50. You know, and I'm always about the multiple. I think it's trading 18, 19 times. But, you know, so it's reasonable.
Okay, well, Dennis, why don't we do this? I'm going to take a quick break. I'm going to call Anne-Marie, and we'll have her make you feel better about life.
Bring Anne-Marie on. I need to get talked off the line. I want to nibble. But I am too scared to nibble. This is my investing hat on, only the investing. All right, because I'm trading like crazy.
All right, we'll be right back. And as promised, here we are now with Anne-Marie Baiynd. She is a longtime friend of the program, author of thetradingbook.com. She's a trader, technician. Anne-Marie, how's it going this morning?
It's going pretty well. Fed chair didn't blink. And so he came in guns blazing and raised the rates. And we've got ourselves this dip that's trying to recover.
And Anne-Marie here, and I'm putting my investing hat on right now because I love this trading environment. As a trader, I love the volatility. Mm-hmm. But as an investor, I keep, I didn't look at my portfolio for like a week, my long-term retirement portfolio, and then I look at it here, and I was like, holy cow, I lost a lot of money last week, and I lost a lot of money the week before, and I'm down on my retirement portfolio, my investing portfolio. I'm down like 14% from the highs, which isn't that bad, but you start looking and it's like, man, that's down in like 2 months, like 14%. And it's really starting to be like, it doesn't look like, when I look at these charts and I look at the long term of the SPY and I look at the long term of a lot of these charts, it looks like we could have a long ways to go on the downside. I mean, when you bring up like a 7-year chart on the SPY, we went from 100 to almost 300 in 7 years. I mean, if you think like, okay, maybe it was a little bit overdone, there's a good argument you could see SPY 200. I mean, and that's serious carnage here if that was to happen. Talk me off the ledge of my invest portfolio, because part of me wants to liquidate my invest portfolio and get back in its SPY 200. Talk me off the ledge.
Okay, well,
it's a lot there.
I don't know how close to the ledge you are, but here's the big thing. A lot of times, and I want to address how we all get to this space of, okay, I'm going to look at it finally. It's been looking like I'm just going to hold my breath and see if it lifts. And, now that it's really down here, maybe I got to make some decisions. So here's what my suspicion is at this juncture. If you take a look at a monthly chart, monthly lows on these candlestick lows, you pull up a monthly chart, you're going to see that there's a bit of congestion sitting. Let's see when that came in. That is July of 17 all the way to September of 17. 3 months we sit around this area that we touched yesterday, and now we're trying to bounce. So what that tells me is that all the cool hand loops that are looking for really fair value are going to be nibbling around this region. And we have a relief bounce setting up here. That being said, we've tried relief bounces every single day this week, only to fade and move downward. So the bad news is everything that I said the last time I was on still holds. We're in an intermediate bearish formation that's going to give back some of these gains, and all of our mighty bounces are going to fade. But we are going to have ourselves a little bit of a bounce in the near term. So you have to think, okay, if I come in and I see SPY down another 30 points from where it is right now, do I want to cut and run where I see all the cool hand loops saying, I'm going to start nibbling at real value? Or am I going to wait it out, watch the bounce, and realize, and let me pull up a SPY chart because I don't look at that one too much. But when I look at the SPY, I can see definitely that if I bounce here and I cannot recapture 260, I've got problems. If I can recapture 260, I'm going to see if I can claw my way back to 266. And as long as I can see that happening, I'm going to hold steady to see it bounce. And when I see it fail to get back up over 274, I'm going to trim back very significantly and do some put buying. I'm going to sit around and hedge taking contracts that are short, the ES, which I think is what's happening. Now, the last time I was here, I said, hey, listen, we've lost a major support level, and that's really bad news if we don't recapture it. And we faded and bounced, and we never got back up over that support level. And so we continue to fade. So right now, we're sort of in a space of the scramble. If we looked at it all of a sudden now and we're like, holy cow, the next thing to realize is, hey, we could fade a little bit, but there's a significant amount of value buyers that are going to step in and try and hold this at least for a little bit of a bounce. And that's going to matter if you're thinking about liquidating part of your portfolio. The fact is, what we tend to do is wait until these things happen, and then we go, holy cow, what do I do now? When really we should always be thinking about the fact that we're playing in the middle of the Autobahn, and the Autobahn has got cars going back and forth, and we're going to be Frogger if we don't pay attention to what's coming down the pike. And so what have we got? We've got debt leveraging, right? Not only do we have debt that we have to pay that's expensive to pay back, we've got RTY, the Russell futures, all-time low yesterday, all-time low. Small companies going to have a rough time paying back the debt. And so what we're looking at is something very, very troubling, but we are sitting close to the first place. People go, okay, we've had this kind of, they'll do Fibonacci retracement and they'll go, okay, I see congestion here. Let's see if we can buy this up into the first relief bounce. And then we talk about the next fade. But 100%, you are correct. We could easily see 200 before this is all said and done in the SPY. Here's the thing though, so many people are seeing that it's going to be a very wicky game down, meaning you're going to bounce hard down, you're going to fade hard down, and you're going to bounce hard up. And it's these bounce hard up that we can protect ourselves with some put buying that we can continuously roll. But you know, the only place to buy the put is several contracts out, and then wait for the bounce so you don't suffer from that theta erosion and the insurance costs so much money. I know
selling rips. I mean, it's all about, you know, like I always say, as an investor and a trader, I'm buying dips and selling rips. And by the rip, I mean, obviously the rally.
Yes.
So in this market, I'm not selling when we're down 900 points. I'm selling when we're up. So I was saying, like yesterday morning, before we went through the Fed, I was kind of nervous to go through the Fed. I've been nervous about my investment portfolio, and I liquidated some stocks at around 9:45 yesterday morning. I was early because we actually rallied 200 more Dow points later on in the afternoon, but I'm feeling pretty good about those sales here today, because now, you know, I was selling when we were around 257, 258 SPY. You know, obviously we got up over 259, so I didn't get the top of yesterday, but now we're at 251. So those sales all look good. I mean, it's difficult to, you know, continue. And the one thing, and maybe we should just take our technical hats off for a minute, because I understand and I see that same technical patterns that you're forming, and the technicals are downright scary, really, when you're looking at this. But when I put my fundamental hat on and I start looking, you know, what's really driving us? Well, interest rates are going up. And Griffin made a great point here in our chat just a few minutes ago, saying this is a repricing for higher rates. Because you know what? And we had Kelly on our show there, you know, just a few days ago. Kevin Kelly, great guy too, and he was saying the same thing. I mean, you have competition now for stocks. We didn't have competition before. You got interest rates, you know, where you can go get 3.5% in a longer term. You know, obviously right now, you know, whatever it is, you can get 3.5% cash. You can get it right now. And if you think, well, I'm going to try to get in this market for 6.5, people are saying, I'd rather take my 3.5 and know my money is safe. So that competition comes into the game. And when the market's going up 20%, the 3.5 looks pretty bad. When the market's going down 20%, that 3.5 looks awesome. That's the mentality that we've got to deal with right now.
100%. That is 100% true. Definitely, definitely true.
So what changes, like what has to change to get people back interested in stocks again? Because right now, you can see by the trading in the last 2 months, they're completely disinterested.
True. And of course, the memory of the recent past is also affecting them, right? And so what they feel from that is, wow, I really missed a big move up, but I remember this selling off and it gets very, very bad and it could get much worse. So what do they do? You know, this really is a stock pickers environment. It's a space that folks at Benzinga, the group really ends up flourishing, I think, because they're looking at, okay, who's performing best in all of this noise? Who's holding their support? Who's bouncing? And then what you become is a short cycle trader. Instead of thinking about pure investment, you start thinking about smaller pieces, shorter cycles, and say, okay, I know some of the biggest rips we can ever have are in these downturns where people get over leveraged in the market space. And so I'm going to look for these very good value events. And then, you know, you start thinking from an investment perspective, you think about what's going to be a good dividend yield. Of course, the dividend yield is going to rise if the stock price falls. So maybe you want to look at something very interesting like a gold-bearing dividend or something that is able to offset if you don't want to stay majority in cash. If you don't want to stay like that, then the offsetting would be, hey, look at some alternate vehicles that are going to give you a shot. Otherwise, you make the commitment to go either I'm not going to look at it or I'm going to cash and I'm going to look for the next time it does X. But here's the thing, because it's so wicky, because so many people are anticipating deep dives, there is going to be a massive amount of volatility. This is going to be a year ahead that's going to be fantastic for the short-term trader. And that cycle is going to get shorter and shorter. We're going to get more and more volatility. I don't see that changing at all in the near term. And really, this is the making of the Fed, right? We have to raise the rates. They have to come up at some juncture. And so this is the price of doing business. It happens.
Anne-Marie, one more, and then I'll let you run here. What about just quarterly rebalancing that these large institutions are going to have to do? I would guess, you know, in the next few weeks here. Like, how will that impact things?
Well, you know, here's the thing. Every time we have moves like this, somebody gets caught flat-footed, and there's a tripping. So for me, all I can do is estimate what might happen and then prepare. So the load rebalancing might be, all right, if I have to actually rebalance the portfolio, I'm going to be selling more of my winners, right? Because they're going to be a much larger part of the portfolio. If I have all these percentages and my winners are still holding, I'm going to have to throw the baby out with the bathwater. So, you know, I think it's going to be very interesting towards the end of the year, but from a technician's perspective and watching algorithmic movement, yes, I see more downside, but this is the area that people start going, all right, I'm going to see some more downside. I got caught flat-footed here. Let's see if I can move and use these hedge vehicles like the futures to shift around how I can create some alpha here before I've got to trim some more gains. And look out, January and February, they're going to be ugly. That's my suspicion.
Thanks,
Now,
Anne-Marie.
You're welcome. Sorry to be the bearer of...
You didn't talk me off the ledge.
you get closer to the ledge.
You tried a bit, but you know what? You might have pushed me off the ledge,
Anne-Marie.
Anne-Marie.
Oh,
I'm so sorry. Hey,
She pushed me off the ledge of liquidate. I'm going 100% cash. Just kidding. I won't go 100% cash, but I'm nervous.
it's an uncomfortable space.
All right. Thanks a lot, Anne-Marie.
Thanks. Talk to you soon.
All right.
Bye-bye.
Have a good one. All right, Dennis. You don't feel better now for that? What's the matter?
Look, sell, Mortimer, sell.
What she said, no, she gave us a nice setup for the buy, and then she's like, oh, look out in January. So
December's been down 12% or whatever we're down. You tell me January's gonna get ugly. I'm going to cash.
let me get out from under my desk here so we can do the show. No,
Jeff Mackey, one of the best. I always love Jeff Mackey on Fast Money. I'm sorry, it's sad they got rid of him. I know Jeff listens every once in a while, so hey Jeff. But I remember during the financial crisis, they're asking him, what position are you going to be in? Are you going to be long? Are you going to be short? What position are you going to be in? And Jeff Mackey goes, the fetal position. Guy is so funny, man. Jeff Mackey, just hilarious. You got to follow him on Twitter. Shout out, Jeff. We love you, buddy.
The famous purple crayon.
Yeah, the purple crayon.
Right.
Last time we talked about the purple crayon, then he did a purple crayon for us on Twitter. He's awesome. We love Jeff Mackey.
All right, let's get to some individual.
Let's get Jeff Mackey on the show. Come on.
We can do that. We can do that.
Get Jeff. I don't know if you've had Jeff. We've had him once, maybe. We got Jeff on the show. Jeff is on.
It's been a hot minute since Jeff was on. We can get him back on, but let's get some individual news today because we did have some. Let's start with TLRY. The story just won't go away. And yesterday they announced a partnership with ABEV. They are going to take over the beverage space together. TLRY and ABEV are going to do that, and the stock popped on that news. And when are we going long?
well,
are we going long anything? This is a rip. Didn't I say sell the rips, buy the dips?
Oh, you did. You're right.
You know what? Yeah. And I do own the one pot stock. Obviously, Aurora Cannabis, I've talked about it for a bit. I'm hoping they keep getting left in the dust. Nobody's going after them. But anyways, I'm getting very nervous with that one too. I'm probably going to end up selling at a loss. TLRY 11% pop, nice lift. I'm not buying anything on a rip. That's my thoughts.
Pre-market high. You got well into the $84 handle. That is not holding up. Currently trading up $8.34 is $79.34. Let's see what happens. Yesterday we part in yesterday's range right now, so you have some reference points here. I would still just do a reset and use 82.39. That was the high from yesterday. The longer it takes to get back up to 82.39, more of a fade I see on this. 71 was the close, but if you're looking for more upside, you want to be in that 83 handle off the open. You could figure, mid-range from yesterday. Boy, mid-range is still down at 74, 75. I guess another target on the downside, your 2-day close is 76.5.
So moving away from the pot stocks, we did have some earnings trades here as well. Let's go the big one here this morning. I'd say it's Walgreens, Boots, WBA. Give us the numbers, Spencer, breakdown technicals.
WBA EPS for the Q1, $1.46 versus $1.43. Estimate sales, $33.79 versus $33.75 billion. So slight beats on both those numbers there. They reaffirmed also their fiscal year adjusted EPS growth guidance from 7 to 12% on a year-over-year basis. So everything pretty much in line from the headline.
It's getting ahead a little bit here. This is error to the downside. I mean, this isn't a stock that I want to own, especially if eventually think they could get Amazon as well. Could it get a bounce at 70? Yeah, I would look at that October low, 69.69. Maybe we test down there today. I know it's at 72, but I'm saying it could possibly get there down to 70. I think it could bounce down there if it gets there, but I'm not really interested in this one either.
Just a bad looking chart. And if like a bad looking chart like FedEx, you saw what happened to that. I believe that was yesterday. I mean,
what was it down $22 yesterday?
Yeah.
What's the PE, Spencer? Do a little homework. What's the PE on FedEx now? This is one I'm actually interested in getting because I actually had this in my long-term portfolio at 90 and I sold it around 150, 160. And I regret it. Obviously went to 250. It's come back down to where I sold it. I can get back in. It's been straight down. FedEx is down. This is incredible. FedEx is $230, 100. It's down 70 points in 2 weeks. This is like they ship I see it's FedEx trucks everywhere. I mean, this isn't like this is a little company. This is blue chip. That's an incredible sell-off. What's the PE on that?
I got a forward PE of 9.
Holy cow. You know what? That's one I actually might nibble into. At a certain point in time, FedEx just gets too cheap. But you know what? Why? Well, there's no reason. I think you're going to get it. Even if you miss it, you're probably going to get a second chance. So let's wait till everything stops going down before I start nibbling. So I haven't seen any reason to say that, this is the bottom.
So
it's really cheap.
All right. So we went from Walgreens to FedEx, and we'll go back to Walgreens here. Just on a good looking chart. Dennis mentioned a psychological $70 level. I'm looking at the monthlies here, and I'll give you a monthly low for you to keep an eye on. And that's the same one from October. 69.69 could be a target on the downside. If we start to rally here in Walgreens Boots Alliance here, what a terrible name. Yesterday's close.
Why? I hate that.
Because it's a European cup.
I know.
Yeah. I'm sure a lot of people would like to see yesterday's low at 72.59 for a gap fill. And the close from yesterday was 73.29. So those are your parameters on the upside.
Also reporting earnings, you had you already had BlackBerry, BB, you got Carnival report? CCL?
They're supposed to.
I think they were due.
I didn't see him.
Conagra Foods, CAG. Carnival's always late. We do this every quarter.
Yeah, we do.
Accenture, they're all down. Everything's down. Horrible day to report on after that big sell-off. They'll find a reason to sell them. Even on good reports, they find a reason to sell them. Even like GIS, got the nice lift. That couldn't hold. It's the same thing. We keep seeing Jabil Circuit. We said yesterday, I'd be ringing the register. It was like a 24.75, 23.75. They come right in. I mean, the short play on these gap ups has just been working, and it's almost like it seems like too easy. Eventually, there's going to be some, gap and goes because it's been getting too easy to just short every gap. But GIS, same story, gets over 40. I mean, it did actually didn't open up that high and ran, so it was a little bit of a squeeze off the hop, but that was the opening candle. Now it sits here, and it looks like it's ready to fill the gap too. I mean, I don't know. Even the food stocks, Joel, that we talked about this yesterday. The defensive food stocks cannot catch a bid either. What's catching a bid?
Gold.
Good point. But you know what? Even gold yesterday. So gold caught a bid. This is a great point too. Gold caught a nice bid early, right after the Fed. Look at what it was doing, and then after 2 o'clock. Well, actually, it wasn't. It was early. It caught the bid, and they hit that too on the Fed news. They hit gold as well. Gold stocks. Gold is up this morning, but gold got killed yesterday. I mean, Barrick Gold got basically from 14 down to 12.80. They rocked gold stocks yesterday too. So now you get a little bounce here in gold stocks. Those look like a good sell too, don't they? Look at ABX. Does that not look like this little, 50-cent bounce here we're getting this morning here because gold is up? Doesn't that look like an opportunity to sell?
That's a big red candle you're working your way through on that.
Try to get through 14. Good luck.
Yeah. Wow. Yesterday's high, you might get a shot at that. No, 1392. That was your high from yesterday, and 14. I'm looking at ABX, right?
Yeah, ABX, yeah.
Yeah, 14's the magic number. You got a high at 1392 and 1404 from the last 2 sessions. So
I'd love it short in upper 13s. I love that short in the upper 13s as a short play. Just opinions here, but that's a nice red candle. And GG, same thing, double G. All the gold stocks got up to 10, and then they just rip your face off. Now you get a little bounce here. I think the bounce is to be sold.
Yeah. Well, gold's up at 1260.30. We cleared the 1250 level. I was looking at the chart on this morning, and the gold futures are up 4% since that November low. And you know who we had on the show last week who kind of was giving us a little head up to potential? Chuck Self. Remember, he was on. He was talking about the gold market, and
he was
a possible.
He was bearish too.
Yeah, he was. We should have listened to him.
Well, we have, but to a certain extent. I don't know what to say anymore. I mean, it's all funny, or it's not, nothing's funny, but I mean, you can laugh. It's all you can really do in these situations is like it's sickening really when you look at it from an investment standpoint perspective. But I mean, there is a lot of people. That's the one argument, and Anne-Marie made this argument too. A lot of bears out there. So there's got to be a squeeze coming again. Eventually, you're going to squeeze all these shorts because it's not this easy on the short side. And it's been pretty easy in the last few days, just selling every rip. So I got to think you're going to get a 2 or 3 dayer like rally in here somewhere. And that's where I'm going to liquidate more stocks because I think there's still long-term pain ahead, like Anne-Marie is saying. But I think there's going to be a rally here eventually. There's going to be some type of washout. There's going to be a rally. And that's the rally that I'm going to be selling. So I'm not going to be buying the dip and the washout, but I'll be looking to sell the rally. If we don't get it, well, there's going to be a lot of people underwater then, because I think a lot of people hoping for a rally too. But
hey, Wolflow, you put it best, I think, in the YouTube chat. What's the ticker for Bud? You got, what makes you feel better? Budweiser. So
they just put the investment TLRY, but I mean that hasn't done well either.
But you're gonna drink it more. This is the point.
I love drinking Bud. Bud Light's one of my beer. But
what do you need to feel better right now?
68 in a matter of 3 months too. That hasn't been. There's been nothing. Find me a good stock for the last quarter, like something that's up substantially. You can't find it. This was not just a quarter where they hit the momos. They started with the momos and then they hit everything else. There's not a lot that is looking healthy out there.
What about what was looking healthy? Tesla was kind of anti the market going up, but now that's kind of
that's top too on this show. After the 380, I said I think the top is it, and we got back up there, had the double, and we tried to take it out. We could not. That looks broken now too. Tesla, I don't like Tesla here either. I'm trying to find a chart that I like. I know Freeman just gave us UXIN, but we're talking big caps. There's going to be some small caps that rally. There's obviously takeovers and different things and stories. But find me some mega caps that look good.
Okay, I'm looking.
I'd love to.
I got you one. I found one. I think. What about Realty Income? Ticker O.
That's small. That's too small too.
No, it's not. What do you mean?
It's not. It's not even an S&P component. Oh. It's pretty small too.
It's a large cap. If you go by market cap, it qualifies as a large cap stock.
What's the market cap?
It's like $19-20 billion, I think.
Yeah, okay. Well, anyways, this is defensive, but that doesn't look great either. I mean, it looks like it's stalling. It takes out 64, and that's going to look like a little bit worse too. Different. And I don't follow them, but the REITs have held up better. We know the REITs have held up better. You can look at any of the REITs, and they've held up. We had obviously Kevin Kelly on the show talking the REITs as well. Some of them have held up pretty well, but that's the kind of stuff I'm selling right now because you know what? If it really starts to get ugly and the SHI blank starts to hit the fan, they'll start selling that stuff too.
Let's talk about Facebook from yesterday, Dennis. Boy, oh boy, that tried to rally off the open, but just like the rest of the market, the bottom fell out of it. Now you're even $2 lower here on the session. I guess low of the move. I mean, do you want to think about that? 131.28. That was the low that you had on November 21st. Yesterday's low was 132.50. So we're opening into that November low here, but the only problem with buying it there is you got nowhere to hide until the actual low of the move at 126.85. So I think at this point, if you're trying to long here anywhere around 130, you got to lean on that 126.85 low.
I tried it for a swing trade long yesterday. Stopped out within an hour. That's how tough the swing trades are on the long side. It actually went from 141 up to 144.5. And a 3-point rally in the first 20 minutes. And I was like, man, I was right on this one. And then within, you just start looking, and within a half an hour, it just kept leaking. Then it takes out the open. Once they take out the open, you're in trouble. I probably should have stopped out then, but I wanted to stop out at that low because I set up the trade on the show at the 138.25 low from 3 days ago, and it took it out. So immediately stopped out. I mean, that's what you gotta do if you're on swing trades. I still have a small position Facebook long-term retirement account. Wish I didn't have it. And averaged in like 155. Wish I wasn't in it. But it's fairly small. It's about a half-size position. Always those half-size positions I never do well on. But anyways, there's nothing going well in my investment portfolio right now.
If you're looking for the larger, the mega cap names that have held up better than the rest, it's really just, and they're still down. But PG, Verizon, and Coke. Those are the three that have held up relatively better.
And they're looking heavy now. They're looking like they've turned. It doesn't look like that to you, Joel? I mean, I look at these charts. I think PG topped out. I think you had the breakout through 95, and everybody's like, that breakout was a fake out. Immediately gives it back. J&J poo-pooed all of these, and J&J was its own deal, but it made people scared to hold these other stocks. And they started hitting Procter, they started hitting Coke, and obviously there's not baby powder issues with these other stocks, but it's just it showed everybody that, hey, nothing is safe out there, and I don't want to be in any other stocks that I think are safe. And this Procter & Gamble has had a great year. It's P's. These are not cheap by any means. You think they're going to be defensive, they're going to be hiding places, but they're not cheap. Some of these stocks are trading 23, 24 times earnings going forward because they're, obviously very stable, their cash flows, but they're not cheap stocks. And I've been saying on the show, if you're hiding in these things, I think it's, not safe if they start hitting everything. So that's why I've been, liquidating. That's why I sold some of my Abbott yesterday, because Abbott's held up fairly well too. Some of the big pharmas held up well. I sold some Merck. Merck's held up pretty well. I mean, you're
very well
in the last week, but it's held up pretty dang good. It's been a pretty good quarter for Merck. You know what? I think this is a stock that could, look at the move. At the beginning, in April 2018, it was $55, moved up to 80, this big pharma. There's a lot of meat on that short bone there if they start to hit this thing. I'm long still, some of my Merck, but I've sold over half of it. And I've just lightened up. And some of these I still like. I still like these companies. But I just think that this is not the market that I want to, just be fully invested in.
Yeah, I mean, these stocks hold up for, amount of time, but once you get to overall selling in the market, I mean, especially stocks like this are vulnerable. Also, two things here, Johnson & Johnson, Dennis, you made a note. They came out with guns a-blazing and with good news the other day, right? And they were talking about the buyback, and this is a known problem. And we were talking about the 133 level, and the reason that I like that level was because that was the close on the day of the initial carnage. And lo and behold, that day when you had the rally, when was that? That was on Monday. You went to 132.80, and they really couldn't even get it through that number. Some more downside. Also for PG, those institutional orders that got, the million that was sold at 95. Well, it didn't look too good when it went up to 96.90. But when those institutional orders are something to take note of.
Jump over a couple others. Chat's given us some good ones. McDonald's has held up pretty well.
Yeah.
MCD. This is what I was looking for. But again, look at the McDonald's chart, Joel. Does this not look like you got a little head and shoulders going on there? You're challenging the neckline right now. Now that we're technical traders and all pattern traders, we try to think fundies too. But man, that looks like it could be back at 160. That looks heavy to me too.
I went up quickly through the area. I don't know if it was earnings, but you had a quick jaunt from 172 to 178. Now you're kind of bearing down on that. Keeping an eye on yesterday's low and Mickey D's at 178.68, and then you can see the error that was created in the market down to the $174 area.
Just a lot of these have had selling pressure come in. We got it. I'm really hoping for a bounce, and not only just to sell more stocks in my portfolio, but to maybe put on some of these shorts, because I think the top is in Procter & Gamble. I think, we won't see that 96 again. I don't know if we're going to get a chance. Maybe you got to short them the whole. I hate shorting when the stock's fallen like 3-4 points in a couple days in a conservative stock like Procter & Gamble. I like to see a little bounce to sell, and like setting up like the Tesla when we were talking about that one that day, when I was saying, the high was in a 380 and it peeled off it. Well, the selling opportunity would have been on the kickback rally when it retested that high and then failed. That's like where the risk is the lowest, and that's where the profit is potentially the most. So, that's what you kind of want to see, is maybe a retest of some of these, or get up, within $1 or $2 of the highs on some of these stocks, as opposed to selling Procter & Gamble when it just sold off 4 points. It's, hard to make money when you're selling the dips, as opposed to I want the rips to sell. And this is from a swing trading perspective, switching the hat again.
Yeah, if you could get any kind of retracement here in this move, I mean, doesn't look like yesterday's low is going to be, hold up to figure a retracement. But yeah, there'll be one. I mean, yesterday's low was 91.29. You had a 91.37 low, but you're already trading really close to that right now. So we'll see. Maybe get a bounce in these. Tesla, I was just looking in the chart for that. Anybody that's trading that from the short side here. Just an alert, 325. You had a pair of lows there back on November 23rd and 26th. So under 325 here, you could say hello to the $300 area, but could be good for a bounce there the first time. Currently trading down $1.68 at 331.29.
For what it's worth, Dennis, Anne Marie just emailed me, and she feels horrible about not talking you off the ledge.
She pushed me off the ledge.
Does that make you feel better? She feels really bad about it. She does. I'm being genuine.
Part of me wants to start, nibbling and putting some of my cash to work when I'm sitting with that much cash. But all the other parts of me say, why? Here all these charts look like hell. It looks like any rally that we do get is probably going to be met with more sellers. So even if, we get a rally, maybe that's, wow. I don't know. I think we got to go lower before I start getting more interested in, from a valuation perspective. FedEx and stuff, maybe a start, but you know what? When they're going straight down, it's always, better to buy on the retest of the lows as opposed to trying to call the bottom the first time.
All right. So I'll give you one thing of optimism here, Dennis. Okay.
I need optimism.
Okay. And we could go back and probably rewind the tapes, and we went on to the September expiration, right? And the all-time high was made on the Friday of the triple witch of expiration for the September contract. And I wish I would have kept the note, but there's these expirations are turning points in the market, right? They're either, hey, we're just going to bust out, just keep the trend going, or there's going to be a reversal. Well, we got our answer. There was a reversal. You have quad witch tomorrow. There's a lot of unwinding. Let's see what the low is tomorrow. Yeah, and people are just probably going to be puking on this expiration. And I think whatever the low is tomorrow, I don't know if this 24.76 and a quarter is going to be the low for the move, not the way we're acting right now. So, and that's nothing fundamental, nothing, I mean, all of a sudden we're going into a major recession. With unemployment at 3.5%, it's a foregone conclusion that the Fed doesn't know what they're doing and we're going into recession. I'm just not so convinced of that, but the market is telling you what it wants to do, what it wants to go lower at this point. So I will be looking at tomorrow's low, if wherever it is, and see if that will be a turning point heading into the next expiration.
All right, Dennis, do you want to know? Do you want to go over what the analysts are saying to buy today? Because
tell me.
We have a decent amount of upgrades to outperform and buy. So RBC is upgrading Pivotal Software, PVTL, to outperform. That's up on that news, but it's giving it back a little bit. Societe Generale is upgrading Halliburton to buy. Who else is being upgraded?
Try to call bottoms in these things, and maybe that's the case. But look at Halliburton. $42 in October is $27. Lost 15 at basically 15.42 with a 40% drop. Well, I guess that moves along with oil. Oil's dropped 40% too. Or at least some of the oil ETFs have.
Boyd Gaming upgrade at Morgan Stanley to overweight. What else? Arconic upgrade. Haven't heard that name in a while. Upgraded at Longbow Research to buy. Those are the biggest upgrades. Humana upgraded JP Morgan to overweight. So some upgrades today. Interesting. Maybe they're calling a bottom. Maybe, I don't know.
Some upgrades, but man, still, I don't know. I'm not talking me off the ledge here with these upgrades.
Okay.
Yeah, the market is continuing to leak here. We're now in the red by nearly 6 handles here. I don't know, Dennis, did we get any imbalances? Maybe that's what kind of turned the market.
It's just sellers. There's just so much over. They saw a little rally this morning and they just come and snuff it out. I mean, it's just this market. It just finds sellers on any rally here right now. I think we're gonna be down 500-600 points again here. Maybe we wash out. Maybe we get a little bounce here. We're gonna due for a bounce, but there is just I just don't see any reason to come in here and start loading up my investment portfolio. So had the investor hat on most of the time here today. Let's put the trading hat on here for a few minutes.
Sure.
I'll give you some imbalances. Bank of America 227,000 to sell. JP Morgan 101,000 to sell. We got the TLT substantially higher. It's not good for banks here either. Looking, at XLU, that usually is good for XLU, is trading up slightly, but J&J 55,000 to sell. The sellers won't stop. I think we're going to see 120 in J&J, especially if we take out the low of the move from 2 days ago. Actually sets up well from the short side, believe it or not. I'm writing that one down right now. 126.83 takes that out. I think we could see 120. Disney 31,000 to sell. Baba 106,000 to sell. Baba's 135 bucks. It was 168 when we talked about 2 weeks ago. Wish I would have sold it out of my long-term portfolio. I did not. It was a mistake. Square 43,000 to sell. They're all selling balances. They're not big. ExxonMobil 96,000 to sell. That's pretty big. Chevron 49,000 to sell. I haven't even looked at crude this morning. Of course it's down because that's just what this market does. I don't know. It's nothing's pretty out there again, guys.
Someone asked about the crude here. We did sneak into the $45 handle. We made a low at 45.82, so you got almost a $2 range. I saw we had a low. I think it was in August of 2016 at 44.97. We got a big bounce, so 45's potential support. Just for you intraday traders here, crude has had a big range today so far, but right now, number I'd just be focusing on, and this is just short term, mid-range is at 46.67. That's currently where you're trading now. So need to get back above that, or else maybe get a retest of the lows. People are asking about how low can Facebook go. I mean, we're trading on the lows of the pre-market session here. Current print is 130.21. I think someone mentioned that they had a red line at 130, so they were looking at a potential buy at that area. Just remember here, if you're doing any kind of buying at Facebook, really the only thing to lean on is the 126.85 low that you had in this issue, and that was the low of the move. Apple down 83 cents, traded under 160 yesterday. Definitely need that stock to turn around. 3 big ugly red candles in that one. Let's see if I can find some monthly support here at Apple, and then Spencer will let you wrap up the show. Let me try and find, you guys don't want to hear this. There was a 160.63 low in April of this year, but your next monthly low after that was 150.24.
All right. Well, I hope the rest of the day goes better than the morning has gone for these guys. But thanks for joining us, everyone. If you missed any part of our show, catch our podcast. We're on iTunes, SoundCloud, Stitcher, TuneIn, and Google Play if you want to hear us again. Thanks to our guest, Anne-Marie Baiynd. Thanks to all of you in our chats, both on the YouTube and premarket.benzinga.com. We really appreciate the engagement there. And on that note, please remember that everything we say on our show is for informational purposes only and not meant to be investing advice. And we'll see you folks on Friday. Hopefully a bullish day.